Welcome to the Perennial Pride Podcast with Tom Savantry. Here you'll learn new strategies and approaches outside the typical financial advice to help you gain more control and freedom with your wealth so you can maximize the impact for your families, future generations to come, and the community at large. Every episode is designed to help empower you to determine the best course of action on your path to financial freedom. And today I'm so excited to have I guess I consider a good friend of mine as I've gotten to the industry, Bruce Wehner from E3 Wealth. He's a co-host of a tremendously awesome podcast, Money Advantage podcast with Rachel Marshall and himself. And I'm really happy to have him. He's going to be a wealth of knowledge, and I think you're going to get tremendous value out of it. So Bruce, welcome.
Well, Tom, this is a pleasure. I mean, we've known each other for several years, and it's always fun to get together and just talk about different things in the industry.
Yeah, no, and it's a treat. I always, as we've had conversations in the past, and I'll share this with my listeners because these are sort of moments in life you kind of reflect on. They're sticky. And the first time I met Bruce was at a conference in Utah, and we met and we just chatted, and super friendly as he always is, a gentleman. And quickly I recognized the type of character this person had, Bruce has. He started getting into education. He was educating me as a new advisor on a topic around pensions and Social Security and all the ins and outs of it. He starts drawing on pieces of paper. I'm like, oh my goodness. Two things I kind of got out of this guy is a great educator. He loves to share, and he before I even got to really know him, he shared me his wisdom. And the second piece of it was that he was just a giving person. I could tell from the immediate time I met him, and we've kind of have gotten the benefit of that over my career as an advisor. So I really appreciate it. So you're going to get educated today for sure. So Bruce, do you remember that, Bruce?
I actually do remember that. We were sitting there, we were talking about pension maximization strategies, which unfortunately we probably don't need to spend a whole lot of time with because there's not many pensions in the United States anymore. So your listeners probably are like, what's he even talking about? But yeah, I remember that. Yeah, I do remember that, Tom. I remember sitting there with you and going over those different strategies. And you're way too flat. You're trying to flatter way too much. Yes, I do like to give, but I always consider talking to other people a chance to actually hone my skills and my presentation skills. And this is something I think is more heck, people in general, anything in life, they ought to improve their communication skills, whether you're just working at the local Walmart or if you're, as a person that stocks shelves, or whether you're an educator and trying to get a key important points across to people. You should always be trying to, hone your communication skills because there's nothing more important in life, I think, than communication.
No, that's really key. And I harp on my kids all the time because they're at an age where they say very few words. So they said, the way you prove you know something is to explain it and educate somebody about it. And then you could prove whether you really know it or not. And I kind of forced them to explain things to me to see how well they actually learn it or know a topic, because it really helped. It really, to your point, refines your thinking and makes sure that you're communicating effectively, which is so key to life.
Yeah, you may have heard me say this before, but there's four processes in this. Is you're unconsciously incompetent. You don't even know what you don't know. And the next part is you're consciously incompetent. You know you don't know something. The third part is you're consciously competent. And that's not a bad place to be. So you have to actually think through your thoughts before you actually explain them. The goal for everybody is to master whatever you're doing, is to become unconsciously competent in it so that it just rolls off your tongue because you have studied it so much that you're confident and you understand you can talk about it in any given situation with any kind of question. So there is 4 steps that you have to take when you're actually learning anything in life.
That's great. No, and obviously good. So this is a good segue because I want people to learn about your background, to how you've gotten to this stage of your life where a lot of the stuff you share, you're unconsciously competent, right? You just comes out naturally. And the more I think about it, I'm sure.
Uh,
Walk some the listeners through kind of where you started
yeah,
before you even get into the financial world. Like,
yeah.
what's your back?
I grew up in a very small town of about 5,000 people, south of St. Louis, at about 1 hour south, right on the river. It was a great place to grow up. It's a little French place called Saint Genevieve, after the French Saint Genevieve, and it's the oldest settlement west of the Mississippi River. It was actually the first place that fur traders set up before they actually found the confluence of the Missouri and the Mississippi River. And that's how St. Louis got another French settlement got set up. And it was a great place to grow up. I grew up about 2 blocks from the town square, where my father actually had a gasoline, which back then we used to call a service station, because they were actually sold gas and service cars at the same time. Now we have convenience stations where you just, you pump gas and you go get a Snickers bar, you know, and then you take your car to somewhere else to get it worked on. But back then, we called them service stations. And so my dad was an entrepreneur from the very beginning. And so I was born in 1963, and this is part of the story of my journey of finances. So I watched my dad actually earn own this particular business. And unbeknownst to me, when I was born, my dad actually took out a Western and Southern whole life insurance policy. And so as I was going through life, I didn't know he was contributing to this. And that's really important that you know the background of that. So then as I got into high school, I started doing my own entrepreneurial stuff. Now I always joke around like PETA might not appreciate this, but growing up on the river, there was always a ability in the 70s to actually sell furs. And so I actually became a
Really?
trapper right on the river. And I actually had a mentor that was actually a senior in high school, and I was a freshman. And the reason we had a connection, Tom, you'll appreciate this. He was the senior quarterback, and I was the freshman quarterback. And so he actually took me under his wing. So I've had a lot of people in my life that actually took me under their wings to show me different things. Not only did he show me how to trap, he also showed me how to play quarterback. And then in high school, you're just enamored by the upperclassmen. And so I started making a lot of money at that time. And I kid around by this because in 77, you could actually sell a raccoon pelt for anywhere between $50 and $75 in 1977. And so I'm making $1.25 an hour working at the Chevrolet dealership, and I could trap one raccoon and make $75.
Wow.
And that was big when the NBA was into fur coats and things like that. A lot of your listeners are probably like, "What is the heck is he talking about?" But this was a different time. And so then I actually then went to college, played a little college football. I was going to become a dentist because I really liked working with my hands, and I thought that would be a neat thing to actually continue my entrepreneurial journey because dentists own their own practices. But then, Tom, you and I have talked about I kind of got the coaching bug. I coached 1 year in college, and then I realized that I hate recruiting because you actually have to lie to kids, and the reason you have to lie to them is because they're lying to you. They're saying, "Oh, coach, I want to come to your school," and you're saying, "Yeah, we really want you, but we really want you only if these other two running backs say no to us." It's just really sleazy. So I got out of it, but I took my biology degree and I started teaching biology. And then just 2 years into teaching, a company called Franklin Life came about, and they were recruiting teachers and coaches to actually sell whole life insurance as a tax-free retirement to your former players and students. So I got an education really early, part-time, on the values of whole life insurance. Oh, by the way, I actually skipped over it. About the same time I'd gotten married before I started, and my father handed me over that Western and Southern and made me the owner of that policy. And I actually borrowed against it because he told me I could, and we used it for our first down payment on our house. So I tell people
Wow.
I was doing infinite banking before it was cool because this was like 1987. That and then Nelson was doing it. He came up with the concept in the early 80s. And that's a great story. We don't have time for that, but Nelson Nash actually came up with it because he had a lot of money in whole life insurance and the interest rates spiked in the early 80s because of inflation. Interesting, we're going through the same spiking right now. And so he had an adjustable rate mortgage on a commercial building that was going well past 20%. So he decided, hey, I got all this cash value. I'm actually going to take it and I'm going to pay off the commercial building, and I'm going to take the loan payments I was making to the commercial building loan and now make it back to my life insurance policy. So that's when you could always do that. It was always, this is what people don't understand. You could always do this with whole life contracts, but Nelson put a guideline, a structure to it with the PUAs, paid up additions, because before that, most people just wrote simply, the base policy of whole life. And so
Yeah.
Nelson then, so I continued that for a while. And then Nelson continued on. And then finally in 2000, Nelson started writing his first book. And, I had actually gone through, did a lot of financial services while I was a teacher. Then when I actually moved to California to start another school, I kind of got out of it because all my clients were kind of in the St. Louis area. And then that project was finished or blown up or whatever. And I moved back to get back into the business and I got back in full time. That was in 2007. Well, we all know what happened in 2008. We had
Right.
the mortgage crisis. When the mortgage crisis came, that's when I started with E3 Well here in St. Louis. E3 stands for Educate, Enlighten, and Empower. And so that was just perfect for my style. So we had decided after 2008 to find out who was looking at things differently. And we just happened to see an advertisement called a Night of Clarity that was being put on by Carlos Lara and Bob Murphy in Nashville, Tennessee. And I still remember a couple of the advisors went to attend this, and we sat in the first row, and on breaks, we just talked to Carlos and Bob the entire time. And we were like, we've been selling whole life insurance this whole time as the foundation of anybody's financial plan. Why wouldn't we now also do it as a cash management plan, which Infinite Banking System is? So, you and I were talking before the show where you were like, how do you explain what infinite banking is? And I always tell people it's simply an alternative place to store your money in a financial institution. Because when you think about it, Tom, that's all anybody does. They take their money and they store it in financial institutions. What are some of the financial institutions we store it? Well, obviously, we store it in banks. The second place we store it is we store it in Wall Street banks. So 401ks or any kind of investments you do. You can also store it in pensions if you have a pension. Not many people do. And of course, you can also store it in another financial institution, which people don't understand, and that is an insurance company. Now, insurance companies actually get into more investment accounts also. People don't realize this with indexing annuities, variable annuities, so on and so forth. So they're in the investment world also. People have no idea. But you can also then stay in the fixed world of insurance where you take the risk out of it and where you do fixed annuities or other life insurance products. So everybody thinks life insurance is this only valuable for the death benefit. They do not realize that you can actually use it as a cash management system. So I just simply tell
Yeah.
people, let's just look at a place where you can actually store your money like you do in these other institutions and see what the pros and cons of doing this is. And so that took me all the way for the last, let's say, well, since 2008, our road towards infinite banking for the last 15 years, and actually working with Nelson Nash, Bob Murphy, and Carlos Lara. And actually, we were fortunate in actually helping them develop the practitioners program, which is a certification program for IBC for the Nelson Nash Institute. So that was my quick Reader's Digest version of kind of my journey.
No, that's great. That's wonderful. Thanks for sharing that. Yeah, and it's, the couple things I take from it in which is, as a father of two growing boys, and there's some teenagers, instilling some of these sort of philosophies and principles into their mind somehow. Hopefully, it absorbs one being entrepreneurship, right? Being the creator of our value in some way. Obviously, that is not something that is typically shared across most families today as an option. It's to get a job, and there's nothing absolutely wrong with that. But the idea of entrepreneurship, and then two is a different path around controlling wealth that gets ingrained in us. Like, where do I save money? Right, basic concepts. It becomes a very much a automatic thing. It's like money in the bank is a phrase for a reason, and it just gets so ingrained that they never even think about another option, as you were saying, and requires a little open-mindedness. So, I mean, you back to you mentioned, the Nelson Nash Institute, and one of the things this summer I started trying to do with my sons, to may or may not endorse this or not, but I'm paying them to read certain books, and one of them is Become Your Own Banker, amongst a bunch of other foundational books like The Richest Man in Babylon and Think and Grow Rich, just to give them a flavor and understanding of wealth in a different way than what they would typically get. My son took a class in high school, and it was just about how you invest in stocks and bonds.
Right.
That was the Finance 101 version.
Right.
So, becoming your own banker is one that I would suspect most people have not come across and haven't read. And to your point, haven't experienced or become knowledgeable about an alternative place to store cash and use, as you were mentioning, a cash management system that you can own and control. So this is one that I've instilled with them to at least give them exposure to it. And that's partly why we're doing this podcast, and what you're doing, you and Rachel, is to share this, at least get it out there for people who are open-minded about alternative options.
Here's the thing, and maybe you can relay this to your listeners or even your sons and stuff. Is the great thing about becoming your own banker is Nelson starts out with the human condition. Why people think the way they think. Like he talks about the problem of savings is people are not taught how to save first and then invest. And one of the reasons that they do that is because he says a luxury that is enjoyed once becomes a necessity
Hmm.
in people's minds. And heck, you and I grew up. I don't. I hazard believe that you probably had some things that were like I had. When I grew up, there was only three channels, and we actually had to get up off the couch and change the television. And we didn't have air conditioning in our house. We didn't have air conditioning at our school. I still remember there was one fan in the middle of the corner of our classroom, and you would actually, in a hot day, you were just watching it as it oscillates, and you were hoping it was going to come back to you faster. And so Nelson always talked about these things that people think now are necessities. And I see this all the time. And that's what keeps people from saving. So that they have to have the latest shorts or apparel, or they have to have the latest shoes. And all that's okay, but you should save first so that you can invest. And then the investments actually should be purchasing those things, the cash flow off of those. So delayed gratification. The problem with this is that that's not really exciting. And so that's why, and I'm not anti stock market. I am not. I like all types of investments, but you really need to save first. And that's the part that people have gotten away from. Prior to 1979, when the 401k was actually put into place, that's what people did. They just saved. And why were they able to do that with some degree of success? Well, there's a couple reasons. One, a lot of people had pensions, so they knew retirement was taken care of. But they also were getting good returns and at the bank. But also, this is what people don't realize, is most of the savings that was done was being done in whole life insurance contracts at that time. And it wasn't until this 401k came around that the average person was introduced to the stock market and mutual funds and bonds, that all of a sudden there was this whole mass advertising campaign to get more and more people to put money in the stock market. Now, if you indulge me right here, I'm going to say, every financial institution, every financial person, including you and me, has something to gain from teaching you things and monetary gains. And that's why I tell people all the time, don't just take what I say and just run with it without thinking what's in it for me. But it's also not only what's in it for me, but then what's in it for all the other financial institutions. 401ks, think about this. They try to take a systematic amount of money out of your paycheck every month. So they want systematic withdrawals. They want to then accumulate it for a long period of time. So they get to hold it that whole time. And then when you actually have access to it, in most cases 59 and a half, they then encourage you to trickle it back to you on a monthly basis as little as possible. They try to tell you, well, you don't want to run out of money. So that's what's in it for people that are selling 401ks and IRAs and stocks. They're trying to keep you in the stock market as long as possible. Even if you're buying it in an after-tax brokerage account, think about this. When stocks are up, what does your investment advisor tell you? Well, don't sell it now. It's going to go up even higher. When stocks are down, what do they tell you? Well, you don't want to sell it now. You want to wait for it to come back. So when do you ever sell it? I mean, it's like there's no practical way to do this. So you have to then say to yourself, there's always something in it, a service from all these different financial institutions. You have to then have a goal philosophy and guidelines that you're going to follow. That's what's best for you. So every one of these financial institutions has something to offer. You have to decide whether they're good for you.
Yeah, and that's so key. And I always use, and how you're big into golfing, right, Bruce? And always struck me that the basic analogy of, the product versus strategy, and
Right.
understanding how it fits into your personal values and principles, because we can have the best drivers in the world, or, clubs, but what's our strategy and approach? What's our swing? What's our
Right.
swing? Is the mechanics good? Is it, good habits around practicing, all those sorts of things that make you good? You have to have that foundation. The products, then you can sort of mix and match and figure out what fits best. But we get so enamored in the financial world of the product itself, whether it be a life insurance or stocks and bonds. That's what everyone wants to talk about. But how does that fit broadly into what you're doing? And they all have a place. And that's I think we can always get mesmerized with the concept of a particular tool itself, just like in IBC, infinite banking.
Yeah.
Right? It's about a process, strategy
Right.
to manage money. Right?
Absolutely.
It isn't about insurance
And
per se.
it's not about which particular company you use as far as what the dividend rate is or what the cash value accumulation is. Obviously, they have to be better than average. I mean, you don't want to put something in that's less than average. But the fact of the matter is, it's a process. Are you saving money? And then, if you're saving money, then you look at the company compared to what their customer service is like. Because if you cannot then access your money fairly easily to go do what you want and stay in control, that's the most important thing. You should be evaluating companies on their financial strength and on their customer service. You shouldn't be evaluating them based upon what their gross dividend rate is, because nobody even knows how it's proprietary, how they're determining that. There's no industry standard. And this is something that it's really easy for somebody that doesn't understand all the ins and outs to just say, well, we use this company because they have a 6% dividend. And I don't think you should use that one because it has a 5.2% dividend. And I say, well, yeah, but what about all the other factors? Do they even embrace infinite banking? And do they actually have good customer service to get you your money when you want? And oh, by the way, 6.0 dividend is a gross dividend. The other one might actually be a net dividend after they've taken out some of the fees. But people don't, we're in a McDonald's drive-through society, We just want it as fast as possible. I'd rather sit down and have a nice meal and enjoy the meal than just try to say, "Oh, I just want this over with. Give me my hamburger right now because I think it's good." And that's what people do all the time. "Oh, infinite banking is really good, so I'm just going to really quickly do this. It's Here's the best company because this person said it was," and they don't do any research. We encourage people to actually do all the education first from a competent person who has done, literally hundreds, if not thousands, like I have over our career. And I'm not just talking myself. I mean, I've been involved with 1,000 of these, but I also have an entire office that have done thousands of these, and we've seen how they've worked. And it really should be the foundation of every family.
And to your point, especially around people who are, which to your point that the fast food analogy of McDonald's, and we want it now, we want to see everything result now, and we've just grown to be accustomed to that luxury versus need sort of thing. But in our financial worlds, this is why things like IBC require you to think long term,
Mhm.
right? Because we'd have to see the bigger picture of all of this, because we're here for however long we're allowed to be on this earth and enjoy it. But if you can't see long term, then IBC probably is not a great fit anyway, because these things take time, and they also there's no magic to it. It's saving money, and it comes with time and with patience and understanding how it impacts not only your life, but even future generations. So this is Bruce, this is a question that I curious too, because and hopefully it's okay, because you are a big proponent of it. You educate people around it. You adopted infinite banking, and people are like, well, you don't even have children. Why would you even have life insurance? Why would you even do it?
Yeah.
Why is that part of your life the way it is?
Yeah. I often tell people, I don't, my wife and I don't even have children. So we're not doing life insurance to leave a legacy for the next generation. Although we've actually, we have a trust and we're leaving it a lot to our nieces and nephews. So that is the
Mm,
next generation. But but really that's not a goal for us. Now we do want to take care of each other. So in case one of us would leave the earth prematurely, or as Nelson used to say, graduate early from the earth, we want the other person to live the same type of life they were living before. And this irritates me, Tom. I sit down with couples all the time and they say, "Well, I don't want to be worth more dead than I'm alive because she'll kill me." And I'm thinking, first of all, I'm not sure you have a great relationship if you look at it like that. The second thing, even if you are joking and you have a great relationship, what people don't understand is it's impossible to be actually worth more dead than alive because underwriters and the actuaries make sure that doesn't happen. So I've actually had an underwriter tell me one time, "We do not create estates, we only protect estates." And so it's absolutely impossible to be worth more dead than alive. Example, growing up in the 70s, I had no concept of what $100,000 was. I had no concept because, my father was probably making somewhere in the neighborhood of $5,000 a year at that time. So to think that somebody was making 100,000, there weren't even a majority of the athletes at that time weren't even making $100,000.
mm,
So that concept was not even a part of my thinking. But now, I have people that I sit down with and they say, "Oh, I have plenty of life insurance. I have $300,000 term policy." And I'm like, "Oh, really? How much do you make a year?" "Oh, I make 150,000." So I'm like, "Okay, so that means your spouse is going to be able to live basically for after taxes about 3 years on a on this amount of money, 300,000." And it kind of hits them because when they put that in place, they're still thinking about the past when $300,000 was a lot. And we have to bring our thinking into the future. So I often say you have to think about your thinking. You can't just think. You have to think why you have these biases or these type of ways of thinking. So really, if you want to replace 150,000, now you don't have to replace it all because you're not going to be around to spend any money anymore. but it would be nice if your wife or your husband could replace some of the money that is lost, because there's some of the things for a couple go away, like car insurance, car payments, food, clothing, those kind of things go away from that person. But the electrical bill is still the same. The internet bills are still the same. The mortgage is still the same. All these other things that two were actually sharing are still the same. And then the other fact is, it's tough to lose a spouse. It's tough to lose a partner. Why do you want to give them the bare minimum to get by? I never understood that philosophy. So as my wife and I, we both make good livings. We both could live easily by ourselves, but why? Why would we want this? This is the difference. I tell people all the time, if you're buying life insurance as a need product, well, yeah, then you probably don't need very much. If you're doing it as a want product, what do I want to have happen? Well, I don't want my wife to have to worry about it. If you have children, you don't want your wife and your children to have to worry about it. So that's what I want. It's not what I need. Okay. The other thing I want is I want to accumulate my cash in a tax free position. That's what I want. Okay. And I'm not comparing it to an investment. I'm comparing it, although frankly, it compares to some investments pretty well. Actually, it's uncomparable in some ways, with the guarantees and the
Mhm.
likelihood of dividends. And, if you get a 4% tax free return and you're in a higher income tax situation, it's the equivalent of getting about 6% in a taxable situation. And oh, by the way, the taxable situation is probably not guaranteed or highly probable. But if you just want to compare it to story, then that's a place you can store it very favorably. And that's what I want. I want that situation. That's part of my philosophy, my foundation. I'm not going to let the banks control my money. I'm going to let the banks take care of my put and take accounts, my checking account going in and out, in and out. My credit cards are going to pay for my credit card, but I'm going to let my money that is important for emergency and new opportunities, I'm going to store that in a different place. I want to take my tax-free income for the future, and I'm going to store that in a different place.
It's such powerful stuff, Bruce, because that whole concept of needs and wants, and we've been so conditioned in a lot of ways, especially around different types of insurances. What do you really need? What's going to get your family by, whether you pay down the mortgage or be able to fund college? It's just try to get to the basics. And to your point, like I want to talk about, what do you want to happen?
Right.
You have control to do something about this today. You can put in place things so that whatever you want to happen will happen, even if something happens to you and you're not around. And it just is a much more empowering position to be in. And I sometimes even get choked up personally when I tell somebody, I said, if I walked off the face of the earth today, I know my family will be able to have the life I want for them. And that is empowering because it also allows me to focus on building wealth and looking at investments, because I put in place what I want to happen if I'm not around. But if I'm here, I can focus on the other things that are more the offense, right? Of the side of our wealth, and building it, growing my personal development, real estate, whatever it is. And I don't have to worry about that. And that's a extremely, in my mind, to your point, why it's a foundation, a super empowering position and feeling to have. And it's something that people, I think, I share that with people. It's amazing when sometimes the light bulb comes on and it says, you basically eliminated a problem that could occur in my life. And it just takes a little bit of money. Okay.
I think it's crazy that most people, even if they had their house paid off completely, they wouldn't drop their homeowner's insurance.
Yeah.
And Tom, I think you know this. I lost my entire house to a house fire in 2014. I know the value of insurance. If there's anybody who knows the value of insurance, I know the value of insurance, because we were not hurt because I had my home well insured. Car insurance. Now, there are people that they have to have car insurance because they have a loan on the car. It's required. But once the car gets older, what do? They usually go down to just purchasing liability insurance,
Mhm.
which, we could argue whether that's smart or not. But having life insurance actually allows you to live a better, more fruitful life too. Because you don't know it, but what you're always in the back of your mind, you're always worried, what if something happens to me? I mean, that's if you love your family. If you don't love your family, well, then you're probably not talking to Tom or I anyway. But if you love your family, you're probably thinking, what would happen? Even if it's just subconsciously. And I can prove it to you that it's important to live your best life possible by having life insurance because all you have to do is cancel your complete car insurance, just cancel the entire thing, and then drive across the state you're in and see if you don't drive differently. And I know your listeners are going to be laughing about this because they're going to feel that there's no way I would ever do that. I'd never drive in the East Coast traffic without some type of insurance. And yet every day people live their life without well-designed life insurance. And whether they consciously think it or not, they are living their lives through fear because they know if something happens to them, their spouse and children are not going to be very well off. Now, fortunately, Tom, or unfortunately, depending on your point of view, I've actually been able through my career to deliver checks from insurance companies to clients that have passed away. And although you never want to lose a life, the fact of the matter is we're all going to graduate from the earth. When you hand that off, it can't replace the life, but you did whatever you could do to help this family. And they are so appreciative of that situation. And I'd never like to sell in a fearful situation, but I've changed my attitude over the last 10 years that I'm just going to tell people the truth that they're underinsured. And if they pass away prematurely, it's going to put stress because I'd rather do that than actually have a conversation with them when one of the spouses dies and they weren't covered. At least I could say I exposed them to life insurance that could have helped them. And if people think that's a fear-based approach to selling, well, that's their problem. I'm just going to do what's best for the family.
No, and I'm completely on board with that, and I think like just as going back to kind of how we started this around educating people to see a different perspective, those who are open minded and recognize that you're just giving them the truth, and then they're empowered to decide, and that is all we can do, right? In life, there's only so much we can control, and so to me, I'm a big proponent of that as well because I just want people that have all the options available to them and understand what they're doing and decisions they're making, what impact they can have for themselves and their families. And then at least they can sleep soundly at night with the decisions they're making, as opposed to maybe having half information or half truths. And that's kind of why I love this industry and be around people like you and others who are just trying to spread truth and let people make the best decisions they can for themselves.
Mhm.
Because how I started this podcast was centered around my family's inability to actually seek out the truth, find it around their financial lives. And it basically ruined them because they did not have the right information for themselves. And it's empowering. And that's, I think, part of our duties is to share it. So I really appreciate you sharing those stories. Very, very powerful.
I think the reason people don't share, we are a country of immigrants. And when people came, they actually had to keep their finances close to their vest because they didn't want people to know what anything about their finances. And they were all entrepreneurs and so on and so forth. And thus then they didn't share. Most families did not share then with their family members for the fear that it was going to get out. I grew up like this. My dad would never tell me what he made. He would never tell me how much a car was that he purchased. He would tell me of how rude it was if you ever talked about money in front of a person. I think it was one of the things that motivated me to actually find out about how money works.
Mm.
And now I'm encouraging families to talk very, very openly about how money works, not only with your immediate family, but then to the next generation and the next generation. And then Rachel's actually coming out with her book called Seven Generations. And it's a Native American idea about thinking about your family as seven generations so that you can keep not only the financial things in life, but also the things that are important as far as your family values and your character and your family constitution going along and leaving a long, long legacy. She inspired me to look back, and I've gone all the way back to six generations in my family in Germany, and I got to find the next generation. But what's interesting is, I come from a very entrepreneurial family, which, as I think about my thinking, Tom, like I just said, really, we all come from entrepreneurial backgrounds because most immigrants, they had to be entrepreneurial. They had to start businesses because there weren't any of these huge corporations set up yet where you could just be an employee. That didn't happen until the Industrial Revolution in the late 1800s. More people have to understand history, but we don't study history anymore. Schools don't emphasize it. They want to emphasize other things, which we can't get into right now. But history will actually show you the value of many things in present day.
No, I certainly appreciate that more and more each day, and sharing some of that, and certainly forward thinking about the legacy you leave. For some people, that's not as important. For me, it's very personally important. And a colleague that I think we both know, Mark Bertrand,
Yeah.
he said something that sort of stuck with me, and he says, you talking about legacy, he says that we all die twice in our lives. We die physically once when we unfortunately graduate, as you mentioned. And the second time we die is the last time someone says your name.
Mhm.
And I was it really struck me. And it's ironic because I was sitting in a restaurant shortly after hearing this, and the waitress was really animated, talking to her clients or customers. And she said, "Today is my sister's birthday. I say her name every day so she never goes away."
Oh,
Like, oh my gosh. And it shows you the power of what that means, and what do we do to kind of impact the legacy for those who come after us. So it's really, really, really impactful. Bruce, this has been great. I could talk to you forever. I love our conversations, and hopefully down the road here, there's so many other topics to unpack around IBC and personal finance. I'd love to have you back on here, share your wisdom. It's always a breath of fresh air for me, and hopefully for our listeners as well. So, any parting shots on your side before we conclude?
no, I think I we have to slow down to move forward. And that's a concept that I don't think enough people they think, oh, we just have to move, move, move and keep doing things. Investment people are like that all the time. They're like, oh, I got to keep my money moving. I got to keep my money moving. And unfortunately, we make a lot of mistakes when we just keep moving forward. I tell people all the time that there's two major industries that make the most money on average, and that are entertainers and athletes. Now, business owners, obviously they make the most money, but a very small amount of those. Most business owners just make a really good living or an average living. But the two that make the highest average amount are entertainers and athletes. And what do? They go hard, 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 and then they relax and think about what should happen. Like an athlete, they play their season. Then after the season, they say, what should I work on?
Hmm.
What should I do to my body to get better? What should I do to my skills to get better? And then they do that in a slowed down environment, and then they go hard again during the season. Entertainers do that too. Whether it's whether it's a actor or actress, they go hard, they make a movie, and then they go and relax and think about their craft. I just read Matthew McConaughey's Green Light book. Wonderful book for your listeners to actually read. And it talks about how he looks at life as an actor. He's very well
Mm,
paid. Entertainers the same way, whether it's a musical entertainer or whether it's a dancing entertainer, they practice, practice, practice. They go hard and then they take a break and they figure out what they could be doing for the next show. The same thing should be happening in your life. You should go hard, but then you should take some time to figure out what's my next steps. How should I educate myself to actually make my life better? Not just financially, but in everything, your family, your personal health, your self-awareness. Need to slow down to go forward.
that's powerful stuff. And to your point, going through some of those struggles and stretching yourself, it's amazing what kind of growth and maturity and skill sets you'll develop if you continue to be persistent with that over time. Really great stuff. So, and so Bruce, to reach out, I know we talked a little bit about the Money Advantage podcast. Certainly, everyone, I would highly encourage you to listen. Bruce and Rachel do just a tremendous job. I'm a avid listener to their podcast. And how best to reach you if anyone wants to learn more about you and E3?
Well, you can simply email me, BWEHNER, N as in Nancy, ER, at e3wealth.com. And yeah, if you would like another resource besides Tom to listen to, um, the Money Advantage podcast, which is on all your places you can get podcasts. But if you want to actually engage and see some of the guests, I really think there's a lot to learn from video when you have a guest on. You can actually go to our YouTube channel, the Money Advantage YouTube channel, and subscribe, and then you'll see us talking about the infinite banking system, personal finance. But also, I think one of the greatest things is we've got good enough following now that some really good guests want to be on, and so we have some really good guests, some resources across the country, and also some just resources about life in general, like the Rabbi Daniel Lapin, who just inspires me every time we have him on. He's actually going to be we're recording another episode with him next week, and I'm excited to do that. I always say I cannot believe we actually attract somebody that has a Wikipedia page. I mean, you got to be something if you have a Wikipedia page.
You've arrived. The
Yeah,
rival syndrome. You've made it now.
yeah, exactly.
That's hilarious. No, I love. I've listened to many of those with the rabbis. So they're great. I would highly encourage it.
Yeah,
Tremendous things about life and wealth and just the feeling of abundance in a lot of ways when we listen to that stuff.
absolutely, absolutely.
Awesome. Well, thank you so much, Bruce. I appreciate your time and mentorship and insightful sort of words of wisdom. My listeners, I know, have benefited. So thanks for being here today.
Uh,
It's an honor to have you here and certainly on people's path to their own financial freedom, which is all we're shooting to help empower. And so hopefully we'll be here for next one for I'll bring you on and later down the road here.
Anytime, buddy. Just let me know.
All right. All right. Thanks a lot. Thank you for being with us here today on the Perennial Pride podcast. It's an honor to be a small part of your journey to financial freedom. If you gained new insight on today's episode, please follow us on your favorite podcast app, such as Apple or Spotify, and follow us on our YouTube and Facebook pages. Also, we always love feedback on helping to improve what we're doing here. So please provide in comments and questions so we can make this podcast even more helpful for you.